The next decade may not be defined by a single financial crisis, technological breakthrough, or political event. Instead, it could be shaped by a slow but powerful economic transformation that is already unfolding beneath the surface. Around the world, governments, businesses, and investors are adapting to a new reality. Interest rates are no longer near zero. Globalization is evolving into regionalization. Artificial intelligence is transforming industries, and demographic shifts are rewriting the rules of labor markets. Together, they have the potential to reshape the global economy. Inflation remained low, borrowing was inexpensive, supply chains stretched across continents, and technology steadily improved productivity while lowering costs. Companies expanded globally, consumers benefited from cheaper goods, and investors became accustomed to rising asset prices where central banks could often stimulate economic growth simply by lowering interest rates. The pandemic disrupted global supply chains, geopolitical tensions, increased competition, inflation returned after decades of relative stability, forcing central banks to raise interest rates. Businesses that had relied on cheap financing faced much higher borrowing costs. Governments found themselves paying more to service growing debt, and consumers experienced rising prices across housing, food, transportation, and energy. This shift represents far more than a temporary economic adjustment. It signals the possible end of an era defined by abundant capital and ever-cheaper money. For businesses, investment decisions are becoming more selective. Projects that once appeared profitable under low borrowing costs may no longer make financial sense. Companies are focusing less on investors, too, are reassessing where long-term value, where risk-free returns are once again meaningful, is the changing nature of globalization. For decades, businesses optimized supply chains by producing goods wherever costs were lowest. This system reduced prices and improved efficiency, but it also created hidden vulnerabilities. The pandemic demonstrated how dependent many industries had become on a small number of suppliers spread across different regions of the world. When production stopped or shipping routes became congested, shortages quickly spread across global markets. Companies are increasingly investing in regional manufacturing. Governments are encouraging the development of strategic industries such as semiconductor manufacturing, renewable energy, pharmaceuticals, and critical infrastructure. While these investments may improve long-term resilience, they also introduce higher costs, where inflation may remain structurally higher than it was during the previous decade. At the same time, another transformation is unfolding inside the labor market. Many advanced economies are experiencing aging populations as birth rates decline and life expectancy increases. In many countries, fewer workers are entering the labor force while a growing number retire. Labor shortages are becoming more common across healthcare, manufacturing, transportation, and skilled trades. This demographic shift affects productivity, wage growth, government spending, and long-term economic expansion. Technology, however, may offset part of this challenge. Artificial intelligence is rapidly moving beyond experimental applications into mainstream business. Companies are using AI to automate repetitive tasks, improve decision-making, optimize logistics, enhance customer service, and accelerate research. Unlike previous technological revolutions, lawyers, accountants, software developers, marketers, financial analysts, and educators are all beginning to integrate AI. This does not necessarily mean widespread job destruction. History suggests that technological revolutions often eliminate certain tasks. The transition, however, can be uneven. Workers whose skills become less valuable may face disruption before new opportunities fully emerge. Businesses capable of adapting quickly may achieve significant productivity gains, while those that resist change risk falling behind competitors. Meanwhile, governments face increasingly difficult financial choices. Public debt has reached historic levels. Years of low interest rates made borrowing relatively inexpensive, allowing governments to finance stimulus programs, infrastructure projects, Higher interest rates have dramatically increased the cost of. This creates difficult trade-offs. Governments must continue investing in infrastructure, healthcare, education, and climate initiatives, while also managing rising debt payments. Reducing spending too aggressively could slow economic growth, while continued borrowing risks increasing future financial pressures. Financial markets are adjusting to these new realities as well. Investors often had little choice but to seek higher returns through stocks, venture capital, private equity, and speculative assets. Now, safer investments such as government bonds and cash equivalents once again offer meaningful yields. How capital flows through the financial system. Institutional investors are increasingly emphasizing quality over speculation. Infrastructure, energy networks, data centers, and healthcare facilities are also becoming attractive investments. Investors now seek predictable cash flows. Resilience is becoming more important than rapid growth. Assets that perform well across different economic environments are becoming more valuable. Public debt continues to expand across major economies. Higher interest payments consume larger portions of government budgets. Governments face difficult spending decisions. Reducing debt without slowing growth has become increasingly difficult. Financial markets are adapting to a higher rate environment. Investors are seeking safer opportunities. Government bonds have become attractive again. Long-term infrastructure is attracting investment. Utilities and energy assets offer stable cash flow. Healthcare remains a long-term investment theme. The global energy transition requires massive investment. Renewable energy infrastructure continues expanding. Critical minerals are becoming strategic resources. Data has become one of the world's most valuable assets. Artificial intelligence is creating new competitive advantages. Cybersecurity is becoming essential. Technology is reshaping nearly every industry. Households are feeling the effects through higher living costs. Long-term success depends on adapting to structural economic change. The next decade will reward those who recognize change before everyone else.